Ya, Safira, untuk membahas proyeksi institusi global pada ketahanan ekonomi Indonesia yang dipengaruhi oleh partner dagang terbesar kita, China, telah hadir di studio CNBC Indonesia, Vishrut Rana, Economist Asia Pacific S&P Global Ratings. Vishrut, thank you for joining the program. How are you?
Thank you so much for having me here. It's a pleasure.
Okay, based on your last report, China's consumer spending showed signs of improvement, but realize the problem will still affect the economy. How will it influence Indonesia's economy?
Yeah, there are multiple channels through which China's economy affects the rest of the world, including Indonesia and regional economies. The one key one is, of course, trade. The trade linkages that we have both on the heavy goods side, which go more into investment, and then on the soft goods side, which go more into consumption. So that's one really key channel, the trade side. Aside from that, we have commodity prices. China is, of course, very influential in the commodity price market globally. Slowdown there, especially in real estate, has an effect on the commodity price outlook, where Indonesia is a key player. And finally, in recent years, China has emerged as a key FDI source for Indonesia, investing heavily into the EV sector. And so that is another channel through which China's economy can affect the Indonesian economic outlook.
And also in your last report, your projections for Indonesia GDP in 2024 is 4.9, which means lower than the government's target. Does it affect it mostly by China's economy?
Yeah, there's a number of factors that are affecting our growth forecast for Indonesia this year. Certainly on the external side, we expect an improvement relative to last year. However, the pace of improvement is going to be moderated by the global economic slowdown. Part of that is China's slowdown, but we also expect sequential growth in Europe and the US to remain somewhat modest this year. Which means that the improvement in the trade sector for Indonesia is likely to be somewhat slower than anticipated. On the domestic demand side, we expect a slight moderation from last year. Monetary policy remains relatively tight. In the region, we've seen consumer confidence moderate somewhat, and this means that domestic demand will also be slightly lower than target this year. However, as monetary policy normalizes globally, and as the trade environment improves, we continue to expect resilient growth out of Indonesia in 2025-2026, where we project 5% growth for the economy.
I see. And how is our government should anticipate it?
There's a number of factors, I think, going into this policy-making cycle. I think there's a lot of focus on the downstreaming of resources, particularly nickel, which has been successful in attracting investment and establishing that sector. There's also some emphasis in terms of boosting consumption in the local economy, a lot of focus in terms of improving education. I think all of these factors are likely to be supportive for the medium-run outlook for the economy. And we continue to expect that the growing middle class will be a key player in Indonesia's growth story going forward.
All right, and since you've mentioned about the commodities before, based on our last trade balance, our surplus is shrinking quite significant. We saw oversupply in coal this year, and probably it became one of the main factors. With China's situation right now, do you see our coal demand will go deeper and make our trade balance turn into deficit by the end of the first half, maybe?
Yeah, that's a great question and something that we are asking ourselves at the moment as well. There's a number of factors that are affecting the commodity and energy price outlook right now. The first is Brent crude oil prices. These have increased recently to $86 a barrel in the wake of the geopolitical tensions that we are seeing globally. However, they have been mostly range-bound around the $80 mark for most of the year, and we expect that might continue through the rest of the year. This means that there is limited upside for energy prices for the rest of the year. And then on the second side, we see the heavy metal prices also remaining fairly range-bound, and this is largely to do with global demand for goods being somewhat moderate, And also we expect real estate sector to remain fairly muted in China as well, which is a key source of demand for iron ore and related commodities.
How can we expect for another commodities like CPO maybe?
Yeah, so the wider commodity outlook is affected a lot. There's a lot of correlation across the commodities. So when we look at commodities like iron, copper, nickel, there's a lot of correlation. So we expect that there's going to be a broad-based moderation in commodity prices this year. We don't expect a significant uptick. If we look at year-on-year terms, the growth rate for most of these commodities is negative at the moment. So we're actually seeing prices having fallen. So there's some recovery left, but we don't really expect a very sharp one this year.
Okay, if we cannot expect too much on coal, what are business sectors which still promising in the middle of China's volatility?
There's a number of sectors that are doing particularly well in Indonesia at the moment. We see metals manufacturing doing particularly well. If we look at the services side, then financial intermediation, infocoms are all sectors that are outperforming. I think on the sectors where we are seeing slightly slower growth than normal is agriculture. We're seeing slightly slower growth in agriculture. El Nino is a factor in that space. We're also seeing actually fairly resilient growth in construction side because of the infrastructure investment, but wider real estate is a little bit on the softer side as well.
And also you mentioned about middle class before. Recently, we saw the threat for middle class consumer spending is getting bigger each day. Based on what happened in Chile in 2019, do you think it will affect our economy for the next 5 years or shorter maybe?
Yeah, Indonesia's middle class consumer outlook is positive relative, for example, to Chile. The economy has shown a consistent track record of growth and of growing wages. Of course, one key element is getting jobs to these people, and that is happening. We are seeing an increased amount of job creation in the economy, a drive for services and technology, and this means that we are fairly confident that the middle class consumption story in Indonesia will continue for several years. And we expect that wealth creation will happen in the next few years. We think that the rate of growth of that will be around the 5% mark, so a moderate pace, and it should be a more consistent story than what we saw in other places across the world.
From your perspective, what is the biggest problem in the middle class right now in Indonesia?
And this is a tough year for consumption in Indonesia. What we're seeing is what we saw at the start of 2023 is there was a big reopening boom post-pandemic, right? The reopening of the economy led to strong consumer sentiment and improvement in the contact services sector of the economy. Some of that is fading from the data now. And it comes on the back of a period of high inflation that we saw early last year. Now the inflation is moderated, but interest rates are still high, so we're slightly tight on the monetary policy side. And this means that 2024 is a bit of a transition year for consumption, right, where we're going to see slightly lower than normal consumption this year. Once those effects wash out of the data, once we are beyond this phase of of tighter monetary policy, we should start to see consumption come back online. The labor market resilience is key for that story, and we expect that is likely to continue going forward.
Okay.